Well, $300 a day keeps the job away. That's the approach I have. So today we day traded two stocks. We traded Tesla and we traded SPY, which is just the S&P 500 ETF. And today we are going to be doing a trade breakdown, breaking down those two positions. So I hope you guys all enjoy it. If you do, smash that like button, subscribe. And if you guys want to learn more about day trading, swing trading, check out our school. It's called the Swing Trading Masterclass. We have private live streams, quizzes, lectures, a group chat, but more importantly, we actually teach you to trade. It's not a get-rich-quick scheme. It's not alerts or anything like that. It's honest strategies that I've learned over the past 7 years. So click that link, sign up, and guys, we have the largest sale we have ever done for over 80% off. The school that is normally $200, you guys are just paying the sign-up cost for $50. You have to use code MONEY. Code MONEY. 3 spots left for that code. Sign up. I'll see you guys in there. And guys, let's jump into this. So today was the day where we took 2 positions. We took one on SPY. So let's break it down. Now, for me, I love the expression MISS, M-I-S-S. Make it simple, stupid. I'm not going to be the type of trader that overcomplicates different strategies or different approaches, or I'm not going to have 30 different charts up. I'm going to just focus on a handful of stocks like Tesla, QQQ, SPY, NVIDIA, and Apple. Those 5 stocks are going to be more of the stocks that I would just be a master of. I want to know everything about them. I want to know very, very strong supports, very strong resistance, and strong trends. So with SPY here, very, very simple trade here. You know, one of the things that we saw as this stock popped up was a lot of sideways trading. Sideways trading is probably some of the easiest tradings you can do because if you can find the resistance, you can do excellent short trades. So looking at this here, we went ahead after about this third time right here of that pop up and sell off, we noticed this nice little trend line. As you guys can see, so pretty much it would hit this and we would have sell off, hit this, we would have sell off, hit this, we had sell off. We also noticed a little bit of a nice support zone, really, where anytime that this stock would go in this range, we saw heavy amounts of buying pressure. So it hits it here, buying pressure, buying pressure, buying pressure, buying pressure. So ideally, you'd want to buy down here and sell up here, or what I did was actually short, which is betting for the stock to go down. So for me here, we went ahead first here after the third time because I love to use like the rule of threes for confirmation sometimes here. So it hits it, sell off, hits it, sell off, hits it here. We have a nice sell off. Obviously, this would have been the best move, but you're not gonna, trade and get every stock at the perfect price. So we actually waited a little bit longer and it popped up here. And this was our entry point near and around 587.91. Now, the thought process I had behind this here was setting our stops just below the trend for a possible push down here to target, right? To push back down to that support zone, which gave a 4-to-1 risk and reward, which you guys know I'll take any day of the week. We have that nice confirmation of that zone where it's very, very, very achievable. So now here, as this stock started, selling off, one of the things that we noticed was just this heavy support for a little bit on these moving average lines. Like normally they would break down through and we would have that good sell off. But of course, when I got in, it was very, very, very choppy. And we honestly just left our stop loss just below the trend. We left it below the trend. So as the stock continued to sell off, we just kept moving it down and down and down for our profit goal down here at about 586, right? So 586.40 was kind of our target. It popped up right here, right off that support zone, and that's where we got out of the trade. Actually, it was right in here. Now that I'm looking at it more closely, we saw this huge sell-off, boom, boom, popped up, exited the trade for a nice trade. Obviously, it came back up, and like I always say, moving average lines act as support and resistance. So it hits this and it acted as resistance, sold off. So this would have also been a good entry point as well. And now it's just riding the trend going down. So pretty much very simple, entering on the breakdown of the trend, selling on the support. We also took a nice trade on Tesla. Tesla was another short trade, and honestly, it was just a textbook resistance trade. You guys can see here that with the Tesla stock here, we can go ahead and draw out the heavy support lines that we saw today. So it hits it right once, twice, three times, recently four times. So now here, as the stock popped up here, I thought that this was a very, very under or overvalued spot for the stock here. Heavy amount of resistance. So what we did is we wanted to wait for that MACD crossover and the overvalued RSI. At the time here, the RSI was at a 74, which is an extremely high spot. You guys can even see that on this dip down, the RSI was only at a 60. So I knew that this was a very overvalued spot, and it has heavy amounts of resistance in this zone, right? Because of the trend. So it hits it, sell off here. So now what we did is we waited for that first candle to break, right? And close below that previous candle. So our entry was at 348.50, right in this range. So now here, as that stock started breaking down, let's go ahead and plan this trade out. Keeping our stops above that high of wick right here at about 340 or 345, pretty much 51-ish in that range. For a target back down to this zone down here, which was a risk and reward of about 3.2. So risking $1 to make about $3.24. So now here, as the stock started selling off, you guys can see it started forming this nice trend. Now, you're probably saying, well, Carter, did you get stopped out on these trades? Well, no. One of the main reasons we did not get stopped out was just because of the risk tolerance. We wanted to just continue to move our stop loss just a little bit as the stock started selling off until a trend was formed. And that's the downside. That's the positive. That's the good thing. That's the bad thing is there's two mindsets when you trade. One, you would have exited right here on that first green candle to pop up, which would have been a nice move, to be honest with you. Couple $100 trade, whatever it may be, $50, $60. Now here, as the stock popped up and started consolidating here, we noticed that MACD, we did not still have that crossover going up, which is a strong sign of sell-off, right? More sell-off to come. So you guys can see that crossover here, but it did not push back up above it. If it did, we would have pretty much got out of the trade. Stock sold off. New trend formed, covered profit at 339, right in that range. So the reason we did not sell was because of the MACD crossover. We waited, and we easily could have seen the stock squeeze up and gotten stopped out, but that MACD really helped us, gave us more indication of growth. So simple strategies, guys, today. Hope you guys all enjoyed this. If you did, smash that like button, subscribe. We'll see you guys in the next one. Make sure you guys like, follow, and I hope you guys have a great rest of your day. Don't forget, check out our school, Code Money, for over 80% off. So check it out.